Hello and welcome. It is the 29th day of May 2019. This is the Money Charts channel. I'd like to welcome you to this video, which will be talking about accumulation, distribution, as well as neutrality, at least from my perspective among things. To me, accumulation is in situations where markets are very undervalued, very cheap to buy, and you should be primarily focused on accumulating, hence the word accumulation, as much of that position that you can. And then when prices get really high, you distribute them. For example, price is so cheap here at $5 Bitcoin, then they go over to 112 distribution. And then there'll be a big camp on longer term thinking saying this whole point was accumulation. And they were right when you look at the larger, volatile, more grand scheme of things. But at least for making it with an easy look of the charts and for where we stand today, I want to look at situations where you wait for retracements and your retracement to where previous high is a good amount. Let's ignore this line on November of 2011, presume it never happened. Rather, we knew there was a high at 1165 and it came back down to 230. So the general way I look at it is you're buying a dip down because you see it's going to be a higher low, a bull market sell off, which is the opposite of a bear market rally. And it's going to eventually make higher highs and break that level of resistance. When you're confident that that's the case, then for me, accumulation is pretty much everything. Well, it could be working in three ways. It could be at that price or lower, a little lower than that price, which might be in this case 7, or even a little higher. Like I want to accumulate everything up to about 22. And the reason why you go a little higher is because, okay, and I'm confident that if it does break this level, and I'm just going to go with normal technical analysis, that yeah, okay, we had a high here at like $12, we'll say, and who knows what the high was beforehand. Actually, I could find out, but I just don't feel like it. Let's do it. But I can't because the Mount Gox data on here, which used to have it, is no longer there. Anyway, what that's being stated. So anyway, you got this high. So you say everything because you know breaking out above 20 here, it's a good buy spot, and you can see that it was. So that's where you can say, okay, anything from here and lower is accumulation if you think it's going to go way high. So this will be for those people who think Bitcoin is going to easily break six figures in the future, like 130, 150 or higher. Same. This is for that type of thinking going into for today. Okay, so everything below 22 will be accumulation, and everything up to like you maybe times that by 3 or 4 or whatever, 5 times is neutrality, and then everything after that is distribution. So as far as I look at it, buy low, sell high, it means, well, I'll talk about this for portfolio. I'll talk about that later if I can remember. And I want to say now that I can remember because I usually forget when I say that, but I'm going to try to remember how to play this when you are combining your portfolio with altcoins and trying to increase your portfolio, that is. So as far as your net portfolio, Bitcoin's the way I like to do it because I look at how much is my portfolio worth in Bitcoin, how much is Bitcoin worth in dollars, and so forth. And in that, you get to these levels where markets go up in here. Well, I really, really want to stop doing measures of buying into something like this because it's up too high. So in neutrality, the buying stops from because we left accumulation. And in a spot like this, okay, say I do like $25 is below is accum, and then maybe I'll go to 100 above 100 is distribution. So now it would hit 100 in here. So at this point, I can start profit taking a bit, buying gold, buying silver, buying dollars, using those dollars for whatever else, using them for buybacks at lower prices. And in this case, the best buybacks you got if the wicks were low was a little over 50. And then you break this resistance so you have more rounds of profit taking that comes in. All the way up to 1,000. So if you're in a situation where you're playing on Mount Gox, I believe the Mount Gox happened after the November 2013 high. I might be mistaken, but I don't think I am. But that meant distribution. Sell, 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 sell. Sell into gold, sell into silver, sell into dollars, sell into off of the crypto space, essentially. And if it goes higher, we'll do it again. We'll keep on doing it. And that's one of the key things. You don't just sell, okay, you just don't buy and sell your whole portfolio or whole amounts at once. It's not like, okay, I'm going to buy 25,000 theta. Now my next play is sell 25,000 theta. No. I mean, maybe buy 25,000 and sell in increments, maybe. But even when I buy, a lot of times I like to buy in portions here and there, at least for bigger amounts. But with that being said, you can see here the market goes down. So there were opportunities, especially if you're happy with half off. Oh, so $1,000 off, half off of that is 500. So now when the price is down towards those areas, you're like, okay, I'm going to buy a bit more because we are now having a retracement of sorts. And as it goes on, maybe you did buy at this 400, 500 mark. You're not going to sell in there. In fact, the market goes down even more. So it's a full-fledged decent retracement now. And you're thinking, oh, all the profit taking you did before, but it's even going lower. All of these, now you got to figure. And if you think of it this way, if you're going to sell it, say 1,000, and you're waiting for even a little better than half off, say 400. If you sell, say, 2 Bitcoin at that price for 2 grand, and now you're at 400, and you want to buy 2 Bitcoin, it's only going to cost you 800. Maybe you buy 300, or 3 Bitcoin rather, for 1,200, and pocket the 800 for whatever else. And then same thing as it goes down these lows. You've had sell orders from like 500 and 650 and 7. We'll say that 700 ones you might have filled and 750. Now half of 750 we'll say is 375. You're like, I'm going to go under 3. And then it goes under 3 on this day. And if you missed it, you didn't miss it here. And even then, if you were able to get the 200 and lower, the stuff you sold at 500, you're able to do that and get the buyback. But then as we move forward, we can do the exact same thing again. Maybe you re-entered into the game for the first time. Maybe you got your buybacks and you're now going to just do the whole enchilada. And you're like, this thing is going to go much higher. And now you look at this, same thing. Okay, high was in here, we got 1153. Yeah, so a little, not here at 1163, so a little above the mid 1100s. So getting above 1160, I mean, you want to be buying until like buying at 13, 1400 is probably good technical analysis. So accumulation goes all the way to 1500 now. And you can see that the market goes up, and well, that's just fast forwarding the spoiler everybody already knows. So it goes up to here, and that goes into neutrality. Okay, maybe you multiply that by 4, 5. If you multiply it by 5, that's 7,500. You wait for that as distribution mode. So neutrality in here. Obviously, spots where you're not buying Bitcoin. Although what's going to happen is you may have altcoins going way higher, and you want to protect in Bitcoin. That's a different story. But as far as turning fiat cash into Bitcoin, to me, at this stage, I wouldn't do it. And then you're in the neutrality mode. All of a sudden, as it breaks out in here, at the end of October 2017, you had your 4-5x move from where neutrality started. Now in distribution mode, time to sell, and you have up until into December. And even if these prices here, because reality, let's go over reality. You're trading other markets, so you have the market go up. Definitely a sell spot, but a lot of the altcoins were getting their ass kicked as it was approaching those highs against the dollar. So they weren't really helping your portfolio against such, other than the fact you were able to trade it. But then came the great rally of 2017, and when we look at this, roughly around here, we're seeing Bitcoin prices at 11,000, which technically could have been all-time highs. As weird as that sounds, because of the fact that your Bitcoin value from this point to this point would have accelerated so high because of what all the altcoins were doing, Litecoin, Ethereum, and really dartboard rally, as I call it, because everything pretty much went up. In fact, a lot of the crap coins, or you know what I mean on those coins, went up 40, 60, 100, 200 times. Market volatility and all the overhype and all these different manipulated maneuvers that might have happened might have been a big portion for the reason. However, only price pays in this game. And that meant that you could see, oh my goodness, we got altcoins up 20 times in a month. This one's up 30, and you're like, oh, I gotta sell. And then you see how much they're worth in US dollars or Canadian or euros or whichever one you prefer, and it's worth a lot. So sell. You got profit taking, especially when it's there. How can you not? And then we have another full fledged decline. All right, same thing again, over and over. Everything below, well, 20,000, so you're looking at 27. Everything up to about 27,000 is accumulation. It's times 27 by 4 or 5, so about 100. And I could even go 108. And again, if you think it's going to six figures, then 100 is most certainly the level. Now, if you want to play accumulation, this is different levels how you want to do it. 19,000, we'll say. Say everything from previous high is accumulation. So from 20,000 to maybe 60 or 65 or 70. Pick your number for where distribution starts. That's the number you choose. Maybe you want to do stop accumulating at 11,000. And then neutrality is up to, say, a little bit above this, say maybe 24 or 25, 30, and then distribution is at 30,000. And another way of doing it is what your bankroll is. If you can put a chart of what your bankroll does on a day-to-day basis and do it on that, that's probably the most optimal way of doing it, to a degree, but not because, I mean, Bitcoin price does have price memory. All right, so as far as bear markets are concerned, if you think something you want to play on a bear market rally, and you assume that you want to do it here, well, your accumulation would probably end it at about, like, well, Fibonacci wise, it should have ended everything below 4,200. Neutrality, everything up to 6,200. And then distribution, everything up to from here on in. And in such, if this was a bear market rally, it should not have proceeded as it did post May 6th. Now, I was pretty confident it wasn't going to be one anyway. At least not a full-fledged one that would hold. But in such, this gives me reason why I should be talking about these situations amongst the accumulation and distribution. Now let's take a look at some altcoins. And I think GRS might be a good one to work with for this example. And going back to 2017, we can see that this thing was at 800 down to 130. So then you say to yourself, okay, I don't want to use GRS, I want to use a different one. And I'll choose DGB. So we'll go from the start. This gives me many good moves, and this also gives me more data. 2015 we're looking back at. So pricing against Bitcoin, this was up at 90 and it fell down to 20, so a 4.5x move. You believe that this is a go. You believe this open price is going to be beaten, so accumulation you could say is 130. We'll times that by, we'll pick a number based on its volatility, maybe not quite as high. Maybe you want to go 400. The reason why not as high is because this is only a 5x move. I mean, we were talking larger moves on Bitcoin. That's the reason why. So we'll say you're going to start distributing at 300. And, well, look. Everything you had, well, it came into play. Let's take a look at this on the daily chart to see how much time you actually had to sell. And we'll go back before it. So now we're in September, and it moves, and it has this move. So the only way you're going to get available to that was orders. In that situation, Well, that was a magnificent thing. And this also reassures you the fact, hey, someone bought this big up. They know something, and then it happens again to a bigger scale. In this case, again, you seen how orders worked out, but you also seen how there was a few days at 150. And you knew based on that, if that, well, that might not have been part of your distribution plan. And even in neutrality, one of the things I think is good for that is if you are going to buy or sell, I think you'd want to do so at small percentages and intervals. Just getting finished or just getting started, meaning just getting finished you're buying and just getting started you're selling. But then it goes down again. So in this case, you could be doing the same sort of deal. We had this little bit of extra push, but I mean, you never really closed above 160. So maybe you don't want to start selling big until, like, say, whatever number after that. And so it goes. So here's a spot where you're. Now, obviously, just because things are accumulation distribution, the whole point of this is I'm still going to trade the ratio and it's going to work out when it goes up and down. I'm going to sell back and forth. But the whole point of this is when my value of my portfolio gets really, really good at good points, I want to sell. So, one thing you can look at it here is here you are back in 2016. Bitcoin was just coming out of its bottom areas, maybe only like 5 or 600 at the time. Yet your portfolio could be at a stage where it's like, holy crap, with all these buy low, sell highs that I've been getting, all of these great plays, turning one coin into another. I'm worth 7, 8, 9, 10, 12 times more Bitcoin, 20 times more Bitcoin, and the Bitcoin prices barely went up. Okay. Well, now I think I should do a little bit of distributing, and those are most certainly optimal times again where you can do that. Though that goes in line on marketing your portfolio, and so on. And one of the mathematics on profit taking is if you can go from, say, and I talk about, yeah, you go like 10 times higher, 15 times higher. If you can go from, say, $1,000 to $15,000, and you pull off like 5 grand, let alone what even 2 or 3 is a nice pull. Well, if you could turn 1 into 15, what could you turn 10 into? Just saying. That's one of the ways that I like to look at it as there. And then, of course, any of the if you sold, one of the things I like to do is far within ratio trading. So here, whatever I'm trading this against the ratio, I'm probably going to be selling this and buying the other. But I also might sell some of it against Bitcoin as well. And in this case, if I did, then you can see how buybacks would work along the way. And I got this on daily, so yeah, we realize it's been those 200 prices. Big time distribution obviously isn't for like big prices like 6, 700. Now it's cheap again, and even if you get in cheap, you can say I want to start doing moderate distribution, maybe at 250 or 200 to 400, then heavy one at that. You can try to get creative along the way. And there we can see all the time here in May of 2017, this gets up in here. Most certainly, all levels of distribution should have been hit. And if you consider selling big here, well, if you sold out, as I called it, technically speaking, the price is now even half off now, let alone how much cheaper it becomes shortly thereafter. Also, if you left some back, well, now you keep on selling in here, obviously able to sell for profits until this happens. Again, you hold some back, you keep on selling. And if you sold here and wanted to buy back at 400 or whatever, well, it's successful. But no matter how you look at it, this is going to get you to points when you should be in major distribution levels. If you look at what the Bitcoin price was doing then, we're talking June, we're talking it was into neutral field as it was, what, 3,000 maybe at the time. You looked at the price of where this was before, how much it's worth against how many more bitcoins you've gained. Bitcoins worth decent amount. And if you were worth, say, 4 Bitcoin before, and now you're worth 44 Bitcoin because of all of these shenanigans, and whatever sick number you could choose in that level, well, if you could turn 4 into 44, and you wanted to pull, say, 10 of that, what can you turn 34 into? Move it along. You can see again now if you're doing this where, okay, I think it's going to break this 25 high. And maybe it does. Holy crap if it does. Then accumulation is everything under 3,000. That's pretty sick. Now we're going to talk about this lower high accumulations phase. You're like, okay, this high was way out of control. Okay. So therefore, I think if this thing, I think that's best it's ever going to do is get to, and I think it maybe might, is get between 14 and 1800 area as its high. So therefore, maybe might think to myself, I really want to start selling heavily, maybe at around 800. So I'm going to just start that level there, where 800 would be distribution. So neutral, it might be 800 down to maybe 400 or something in that level, and then accumulation is everything below. And as we can see in here, it's had some big moves back and forth, and that's just ways of just looking at portfolio management, where charts are, where to just to help get in and out at different portions. Because I know some things that a lot of traders also look for is they don't want to buy it's down, rather they would want to wait for some sort of bullish setup. But this is why I counter argue this because as much as I think buying on a break of 206 is correct, and mathematically it kind of is because you probably got to win really fast. Some people don't want to buy on the way down because they want to wait for strength. Well, let's face it here. The 200 is that number. Maybe you bought in here and you haven't been stopped out yet. I understand that one. And even if you're waiting for a clear breakout, you buy 206. But if you're waiting on the way down, okay, yep, you were wrong at 250. You're wrong at 225. If you bought at 206, technically you would have been wrong on time because you would have had to wait several months. And if you bought here at 165, well, that was better. And if you bought here at 147, that was better. If you bought at 126, that was better. So, and I always came up with a strategy early, and just looking at it against Bitcoin, and you can see on this chart how amazing it's done, is if I just stick buy orders on these levels below and just let them hit from previous sell orders, then it works out magnificent. And during this run, like say in February, you can have your sell orders hit. 299 comes down to like 264. Okay, that's not that volatile, so you don't buy it back. Sell some more here, sell some more there. So your last sell order might have been 370. I'm going to buy that back at 280. You say, oh, hit. I'm going to buy that next. Then the one before that, I'm going to buy back at say 220. Okay, hit. One before that, I'm going to buy back at say 165. Okay, hit. And then I'm going to buy at 125, 126, and hit. And then at each one, you put new sell orders in. Okay, so I'm going to sell it, say, 174, hit. Buy back orders, say, 126. Nope, not in play. Then I got a sell order here, 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 and just wait for them to happen. But you've seen before how it has done magnificent. Now, for myself, as far as trading against Bitcoin, and maybe this should be a separate video, and I'm going to stop this and make it for the next one. But it comes down to Bitcoin fees. And taking coins in and off the exchange, I don't want to pay too much. So paying like 2 cents or 4 cents to take DGB is easily laughable for sure. Paying dollar and a quarter for Litecoin right now. Meh, well, you deserve it, I guess. That's a reasonable fee. Charging $9 to take Bitcoin off of an exchange now. Don't want any part of it, unless I have to. So I'm going to talk about that in the next video. And that's a big reason, again, why I'd rather not trade coins against Bitcoin too often. Rather accumulate Bitcoin because altcoins will go way up at some point together. And I'll have no choice but to not only keep ratio trading, but to as well most likely trade one or both of those indices on the ratio against Bitcoin and Litecoin. I got such a higher stake amount of that it's like, oh, I have to pay the piper kind of deal. So now I want to make a Litecoin trade. Okay, so now I send like say 5 Litecoin, and that's like a small trade. And I'm going to sell it for say we'll say it's at the value of say 200 US dollars, so it's $1,000. So I'm buying $1,000 worth of Bitcoin, and I got to pay $10. Okay, that sucks, but I got no choice. And it might even be 15 or $20 by the time Bitcoin. Maybe it'll be 15 or 20,000 at the time. I'm referring to the Litecoin ratio. If I see Litecoin ratio going up to about .02, selling 5 for Bitcoin is in order for me. Thank you for tuning in and have yourself a great day. Bye bye.